Let's cut the fluff. Here's where my account sits right now. Total value, $4 million. I'm up $266,000 this year, and my profits, 34%. Cash on hand, $1.5 million that's ready to deploy. My weekly options income just hit $11,760. That's $51,000 per month estimated, and estimated $600,000 per year in passive income. Now, I don't share these numbers to impress you. I don't even like flexing this stuff because I prefer to stay humble. But I also know that most people have no idea what's possible with the right strategy. The market doesn't care about feelings. It rewards those who take action. And today, I'm giving you 6 stocks I'm playing right now to make money in this AI-driven market. Let's get into it. Most people are playing SoFi completely wrong. They're sitting on shares waiting for the stock to take off. That's not working because the money right now isn't in the stock price, it's in the option premiums. SoFi is a high-growth, profitable fintech stock that Wall Street keeps ignoring. Let's look at the numbers. Net income margin, 18.9%. Revenue growth, 21.9% annually. Over 7 million customers and growing. This isn't some unprofitable hope and dreams company. This is literally a bank that makes money. A bank with zero legacy debt, high margin products, and a customer base expanding every quarter. So why isn't the stock moving? Because Wall Street wants to see more profits before they jump in. That's fine, because while they're waiting, I'm making damn good money every week trading SoFi options. Here's the strategy. Sell cash secured puts every week. These pay insane premiums because volatility is high. If I get assigned, great. I get the stock cheaper and then sell covered calls. This is called the wheel strategy. Rinse and repeat until the stock moves. The stock price will eventually catch up to the fundamentals. That could be next month, that could be next year, but I don't care because while I wait, I'm making a great ROI in option premiums. If you're just holding shares of SoFi and doing nothing, you're playing the stock wrong. Here's the deal. If you don't own Palantir, you're going to regret it. Palantir is the most misunderstood AI stock on the market right now. People think it's just a government contractor. Wrong. This company is building the backbone of AI decision making. Let's get into the facts. It beat earnings again. The stock is already up, but it's not done. Enterprise customer growth up 33% year over year. Commercial revenue up 70% in some sectors. Here's why this matters. AI is useless without real-world application, and that's exactly what Palantir does. It takes raw AI data and turns it into real-time, revenue-generating decisions for governments and Fortune 500 companies. This isn't speculation. It's happening right now. So what's my play? I'm going heavy on Palantir. I bought 1,000 more shares after the last earnings report. That's already up big. I'm aggressively selling cash-secured puts to buy more. Why? Because I want more shares at a discount and the premiums are great. But be careful selling covered calls. This stock can rip higher quickly, and if that happens, your shares will be called away. Now, most people, they're too scared to buy stocks at all-time highs, but great stocks make new highs for a reason, and Palantir is nowhere near done. If you're still on the sidelines waiting for a pullback, you're going to miss the train. I'll be adding more shares while you hesitate. Let's stop pretending. There is no AI without NVIDIA. People keep asking, is NVIDIA still a buy? That's like asking if you should still use electricity. NVIDIA isn't just another AI stock. It's the foundation of the entire AI industry. Look at these numbers. They own 90% of the AI chip market. Revenue last quarter, $22.1 billion, up 265% year over year. Massive AI data centers are being built right now, and NVIDIA is selling every chip they can make. Everyone keeps talking about competitors. DeepSeek, no real threat. AMD, still way behind. The reality is big companies are not trusting their AI infrastructure to China. NVIDIA dominates this space, and there's no real competition yet. Now, let's talk about how to make money with NVIDIA, because most people are just buying shares and hoping. That's great, but there's another way to play this. Own the stock. This is a long-term hold, no question about it, but you can also sell cash-secured puts on dips to accumulate more. You can sell covered calls when it rips higher, but only if you're willing to let those shares go. Short-term, NVIDIA will have volatility. Absolutely. Will it dip? Probably. Does that matter? Not really, because every single AI company needs NVIDIA chips to exist. If you're waiting for some perfect entry, you're going to miss the next up leg. I'm already in. The question is, are you? Next up is JEPQ, and it's the easiest money you'll ever make. Most people try to pick winners in the market. That's hard to do consistently. You don't need to guess which stock is going to the moon next. You just need to get paid while you wait. That's why I own over $500,000 of JEPQ. And JEPQ is a cash flow machine. The annual yield is about 10%, and they pay dividends every month. They own the biggest tech stocks, Apple, Microsoft, Nvidia, and JEPQ uses an option strategy to generate extra income. Let me translate. This ETF prints money. Here's why this is such a no-brainer. If the market goes up, you win because tech stocks rally. If the market goes sideways, you win because JEPQ still pays monthly income. Even if the market goes down, you're getting paid to hold. This is what rich investors understand. You don't just rely on price appreciation, you create cash flow. Here's the game plan. Number 1, buy JEPQ, don't sell it. Number 2, reinvest the dividends or take the cash. It's up to you, but I prefer reinvesting. And number 3, repeat every single month. The stock market is a wealth building machine. The people who win own assets that pay them consistently. That's why I have $500,000 in JEPQ. I know most people are addicted to chasing the next big stock. I'd rather get paid while I wait. If you're not holding something like JEPQ, you're making this harder than it needs to be. Did you know most people overcomplicate investing? They chase hype stocks, try to time the market, or consistently switch strategies. That's why they lose. The people who win, they own high quality assets and let time do the work. That's exactly why I just bought another $50,000 of SCHG. Now, SCHG is a growth stock machine that requires zero effort. They own Apple, Microsoft, Nvidia, Amazon, Meta, Google, all of the big names. They've got an ultra low expense ratio, 0.04%, massive long-term compounding with almost no work. Here's what this means. SCHG is built to make you rich. This is the ETF for people who don't want to babysit their investments. You don't have to guess which company will dominate AI, EVs, or cloud computing. SCHG already owns all the winners. Here's how to play this. Number 1, buy SCHG and do nothing. Number 2, keep buying more over time. And number 3, hold for 5+ years and let compounding do the work. This is the easiest way to build wealth, and yet most people won't do it because they think they need to outsmart the market. If you believe in big tech, innovation, and long-term growth, SCHG is the simplest, safest way to play it. The only mistake, not buying enough. Most people still think Robinhood is a joke. The numbers say otherwise. Revenue, $1.01 billion, up 115% year over year. Net income, $916 million, up 1,000%. And yes, that's not a typo. Net deposits, $16.1 billion, 42% growth rate. Average revenue per user, $164, and that's up 102%. And here's where it gets insane. Transaction-based revenue, $672 million, up 200%. Crypto revenue, $358 million, up 700%. Options trading revenue, $222 million, up 83%. Stock trading revenue, $61 million, up 144%. This isn't just growth, this is dominance. Robinhood isn't just making more money, it's making money in all the right places. For years, people dismissed Robinhood as a meme stock, a pandemic fluke. But what actually happened? Retail trading never died. It's bigger than ever, and Robinhood owns the space. And now they're expanding internationally. They're about to unlock millions of new investors in the UK and Asia. If they pull this off, Robinhood at $65 could still be very cheap. So here's how I'm playing this. Number 1, selling cash secured puts for premium and better entry points. Number 2, watching for key support. If it holds, I'm going even bigger. And number 3, holding long term because Robinhood is building a global brokerage empire. Now, most people will miss the Robinhood opportunity because they don't realize what's really happening. The time to position yourself is right now. And now for a little bit of controversy. Tesla is the stock everyone wants to love, but should you? Let's be honest, Tesla is struggling, and no, this isn't short-term noise. The fundamentals are worse than people want to admit. Here's what's happening right now. The market share, it's shrinking. Profit margins dropping. EV demand for Tesla slowing. The competition is growing. The Tesla bulls will tell you, just wait for the next generation models. But here's the reality. Even when those models drop, it'll take quarters, maybe years before the numbers look really good again. Tesla's real problem? Elon Musk. I don't care what you think about him personally. The fact is he's stretched too thin. He's running Tesla, SpaceX, X, formerly known as Twitter, Neuralink, Boring Company, AI Ventures, and he's pissing off customers with politics. Whether you agree or not, it's affecting sales. And Tesla, it's suffering because of it. And the biggest issue, Tesla is losing its edge. EV competition is stronger than ever. BYD, Rivian, legacy automakers are absolutely stepping up. Then we've got full self-driving or FSD. It's still not mass adopted. Energy, Optimus, robots, still hype, not revenue drivers. So how am I playing this? Number one, I sold almost all of my Tesla shares last month. I have no regrets. Number two, I'm watching for a bottom, but I'm not touching it until fundamentals change. And number three, if I see a real turnaround, I'll get back in. Until then, I'm just watching. And I know the Tesla fanboys are going to come for me. I don't care. I have to be brutally honest with everyone, and this is what I see. Fanboys, prove me wrong with real revenue numbers, not hype. Show me Tesla's path back to dominance. Until then, I'm sitting on the sidelines. Potential doesn't pay bills, so show me the money. At this point, you've got two choices. Number one, you take action. You use what I just showed you. You stop playing the market like an amateur and start making real money. Or number two, you do nothing. You keep watching videos, overanalyzing, and missing opportunities. Then in 6 months, you'll look back and realize you could have made thousands, but you hesitated. Now, I made over $1 million in the stock market last year alone, and you've seen my numbers for this year. That's not luck, that's strategy, execution, and having the right information at the right time. If you want to see exactly what I'm buying, when I'm buying it, and how I'm trading options for cash flow every single week, then join my Patreon. I don't just talk about this, I do this every single day. My real-time trade alerts, my breakdowns, my top plays, you get all of it. You can keep guessing in the market, or you can start playing to win. The choice is yours. If you enjoy my videos, hit the like button, subscribe, and hopefully I'll see you on the inside. Peace, and I'll see you on the next video.